So South African Retail Savings Bond is an investment with the government of South Africa which earns fixed or inflation-linked interest for the term of the investment. So the South African Retail Savings Bonds are available as fixed retail savings bond series consisting of bonds with 2 years, 3 years and 5-year terms. Yo, what's up guys, it's the bossy Chao Malakwan and welcome back to the channel where I talk about personal finance, investing and everything that you need to know about money. So as you might have noticed on the first intro of the video, today I'm actually going to be talking about the South African retail bonds and as to what are bonds, why should you actually invest in bonds, the different types of products to invest in and how can you actually start investing in South African retail bonds and more. So without wasting any time, let's actually get straight into the video of the day. So as I've mentioned in the beginning of the video, South African retail bonds are a type of a government-issued investment product that actually allows individuals to lend money to the South African government in exchange for regular interest payments. So these bonds are typically available for purchase directly from the government or through the National Treasury or through other approved financial institutions. So let me further break it down for you as to how they basically work so that you can get or you can understand well how the retail bonds work. So let's imagine that you have a piggy bank and the South African government has a special piggy bank too. So when you give your money to the government's piggy bank, that is actually called a retail bond. So when you give your money to the government, they actually promise to keep it safe for you and give it back to you later. But while they have your money, they're actually going to be giving you something called interest in return. So interest is like an extra money that they give to you as a thank you for lending them your money. So for example, let's say you give them 100 rands and they promise to give you 10 rands every year as interest. That means that 1 year after you'd actually have 110 rands because they gave you 10 rands extra. So you can decide how long you actually want to lend your money to the government. It can be a short time like 2 years or a longer time like 10 years. So the longer you lend them your money, the more interest they will actually give you. And when the agreed time is over, the government will actually give you back the money you lent them. So if you gave them 100 rands and earned 10 rands in interest each year for 5 years, you're actually going to be getting 150 in total back. So it's actually important to remember that the government is usually very good at paying back the money that they actually owe. So it's considered a safe way to actually save your money, but you have to be patient and wait until the time is up for you to actually get your money back. So that's basically how the South African retail savings bonds actually work. It's like a special way to actually save your money and actually get a little extra in return. So now that you know how South African retail bonds actually work, now let's go and talk about the different products you can choose to invest in. So the South African retail savings bonds have currently 3 products on offer, which is number 1, fixed rate South African retail savings bond, inflation linked South African retail bonds, and lastly they have the South African retail's top up bonds. So let me explain each of these products, starting with the fixed rate South African retail savings bond. So the fixed rate South African retail bond series includes different bonds that you can actually choose to invest in for 2 years, 3 years or 5 years. So these bonds earn a fixed interest rate that is determined by the current government bond yield. So the interest rate is set and stays the same until the bond matures. And each bond term, 2 years, 3 years or 5 years, has its own interest rate. So interest in these bonds is paid into your bank account twice a year, on the 31st and also on the 30th of September. However, if you prefer, you can actually choose to receive your interest payments on a monthly basis. In that case, the money interest will actually start paying at the end of the month following your investment, and the first payment will actually include any interest that has actually accumulated. You also have the option to actually reinvest your interest payments instead of actually receiving them. This means that the interest will actually be added to your initial investment amount and it will earn interest at the same rate as the original investment. So you need to actually indicate your preference when you apply for the bond, and also this option can only be chosen at the time of application or before the first interest payment date. And there's also a restart option available for these bonds. After 12 months, you can actually choose to restart your bond at the new interest rate that is currently available. So this allows you to potentially earn a higher interest rate for the remaining term of your investment. You can also choose to change the investment period to when you restart. For example, switching from a 5-year bond to a 2-year or a 3-year bond. Remember, the restart option can actually be exercised after the bond has been active for 12 months. But for the restart option, there are actually terms and conditions which I'll actually leave for you. Here I have to actually pause and read for yourself. So moving on to the second product, which is called the inflation linked retail savings bond. So the inflation linked retail savings bond actually offers bonds with different maturity periods, either 3 years, 5 years or 10 years. When you invest in these bonds, the amount you invest is adjusted for inflation every 6 months until the bond matures. So this basically means that the value of your investment increases with inflation over time. And additionally, the fixed interest rate is paid to you every 6 months on the interest payment dates. The fixed interest rate is actually determined based on the government's inflation-linked bond yield curve, and this rate stays the same until the bond matures, and you will receive interest payments based on this rate. So investing in inflation-linked retail savings bonds provides two benefits. First, your investment is protected against inflation because the capital amount is adjusted to keep up with the rising prices. And secondly, you receive a market-related real rate of return in the form of interest payments on your investment every 6 months. So for these bonds, you cannot actually choose to reinvest the interest payments. Instead, you'll actually receive the interest payments in cash. To calculate the inflation adjustment on your investment, the reference consumer price index (CPI) is used. So the CPI reflects the changes in the cost of living over time on interest payment dates, early withdrawal dates, or maturity dates. And the CPI on that specific date is actually determined. So to calculate the inflation adjustment, the reference CPI on the CPI calculation date is divided by the base rate, which is the CPI at the time of investment, and then multiplied by the capital amount actually invested. So interest payments are actually made to investors on semi-annual payment dates, which are the 31st of May and also the 30th of November each year. And the interest rate is actually fixed for each maturity option and is determined by the government inflation-linked bond yield curve. And the interest payment is actually calculated based on the fixed interest rate and the inflation-adjusted balance of your investment at the time. So in summary, the inflation-linked retail savings bond protects your investment against inflation by adjusting the capital over time. You also receive fixed interest payments every 6 months, and also the interest rate inflation adjustment ensures that your investment keeps up with rising prices and also provides a real rate of return. Then lastly, let me actually start talking about the South African Retail Savings Top-Up Bond product. So the South African Retail Savings Top-Up Bond is a savings option that lasts for 3 years. To start investing, you actually need a minimum initial amount of 500 rands, and you can actually add more money to your account in increments of at least 100 rands whenever you actually want, either monthly or at any time during the 3-year term. To be eligible to purchase these bonds, you actually need to be a natural person who is a citizen or a permanent resident of South Africa. You actually must have a valid South African identity number and a bank account with a financial institution in South Africa. And if you are under 18 years old, you actually need a parental consent to invest unless you are married or have been granted majority status according to the Age Majority Act. And informal groups can actually provide their constitution documents and have bank accounts with South African financial institutions and are allowed to actually invest. So in this case, 3 signatories are actually required to invest, rollover and withdrawal, and more details can actually be found in section 5.1 of the booklet. So the South African Retail Savings Top-Up Bonds earn interest rates related to the market. So the coupon rates, interest rates are derived from the 3-year rate calculated bonds based on the fixed rate nominal bond curve. Interest earned on the South African Savings Top-Up Bonds is reinvested or capitalized on specific dates, which is the 31st of March, 30th of June, 30th September, and also the 31st of December. The reinvested interest payments become part of the capital balance and earn interest at the same rate as the initial investment. The top-up switch feature has a certain condition, so the balance on the top-up bonds should be 1,000 rands or more. Investors can actually exercise with the switch option during the term of the bond. So investors can actually exercise their switch option during the term of the bond. So if an investor wants to switch a portion of their capital, a minimum of 250 must remain in their top-up investment. And switches are actually processed daily from the 1st to the 28th of each month, and any switch application forms received after the 28th are processed in the following month. So when you reinvest your South African Retail Savings Top-Up investment for another 3-year term, you will receive a once-off incentive of 20 basis points and added to your rollover amount. So the coupon rate will actually be based on the prevailing rate at the time of the new investment. So now that you know the different types of products that you can actually invest in, now let's talk about the benefits of investing in the South African Retail Savings Bond. So the first benefit is sustainability. So the South African Retail Savings Bond have been tailor-made to actually help you take control of your own investment decisions. So you can actually choose the investment product that actually suits your personal needs. You can actually choose how to buy your South African Retail Savings Bond electronically from National Treasury or from any branch of the South African Post Office. You can choose when to buy your South African Retail Savings Bonds. You can actually choose the method of payment on cash or credit or also debit card, and also you can actually choose to repay the interest rates or reinvest it at the same rate. So the second benefit is safety. So the South African Retail Savings Bond are the smartest way to save. So your money is actually invested with the South African government, meaning that the capital amount invested is actually guaranteed. And interest and capital is paid electronically in your bank account, which is a very safe way to actually start investing. investing. And another benefit of retail savings bonds is that there's no charges, commissions, or any costs. So there are no charges, commissions, or costs when you invest in South African retail savings bonds. This means that unnecessary fees will not actually eat into your investment. Another benefit is that is guaranteed returns. So you'll actually earn a market-related interest rates in any South African retail savings bond you actually invest in. For the fixed rate South African retail savings bonds, the interest is actually guaranteed and you will not be affected by any adverse effects in the bond market. And for inflation-linked South African retail savings bonds, your investment is protected against inflation over the term of your investment. Another benefit is that there's no risk. So South African retail savings bonds can't be used as collateral for any loan. Your investment remains safe. So South African retail savings bonds cannot be sold in the market, ensuring that you are not exposed to market risk. And if you choose to reinvest your interest, you'll actually have no reinvestment risk. Another benefit is convenience. So South African retail savings bonds are easily accessible and you can actually apply for and buy the bonds through numbers of convenient channels. And another benefit is affordability. So South African retail savings bonds are very affordable. The minimum amount that can be invested in any of the South African savings bonds are as follows. So for fixed rate South African retail savings bonds, 1,000 rand is the minimum. Inflation-linked retail savings bonds, 1,000 rand is also a minimum. South African retail savings top-up bonds, actually 500 rands for the opening amount and top-up amount of 100 rands. Remember, there are no fees, commissions, or charges payable when buying these bonds, making them even more attractive. So each South African retail savings bonds will be repaid on the relevant maturity date. So accessibility is also another benefit when investing in retail savings bonds. So if you're in urgent need of cash, you can make an early withdrawal after 12 months subject to payment of a penalty. And the last benefit actually includes flexibility. So on the fixed rate South African retail savings bonds, you may choose to restart your investment after 12 months at the prevailing rate. On a South African retail savings top-up bonds, you may switch to the fixed rate or inflation-linked South African retail savings bonds once your capital actually reaches a minimum of 1,000 rands. So it's basically a 3 easy steps you need to follow for you to actually start investing. So firstly, introduce to register and actually provide your personal details. You can provide these details on any branch of the South African Post Office or South African Retail Savings Bonds website, which is the retailsponds.gov.za, or if you're under the age of 18 and not married or have been granted majority status in terms of the Act of or the Age Majority Act, you may not apply electronically and the authority of your parents or guardians is required in writing. Or you can actually provide these details or directly at the National Treasury, which is located in Pretoria, or telephonically. Once you've registered, you'll actually receive a unique reference number that will actually be used as a reference when your payments are made and transferred into the South African Retail Savings Bond Bank account. Secondly, you'll need to apply, which is select a bond and also the maturity. So you can do that at any branch of the South African Post Office, or you can do that on their website, or you can actually do that also directly at the National Treasury at Pretoria. Or you can also try and give them a call, which will actually give you a reference number that will actually be used as a reference when your payments are made or transferred into a South African savings bond. And then lastly, you need to pay. So how are you actually going to pay? So you can also pay at any branch of the South African Post Office, on the internet banking, or do a direct deposit at the bank. So guys, we've actually came to the end of the video, but if you feel like you want to know more about South African retail savings bonds and you still have questions about it, then you can kindly comment your questions in the comment section below, or you can kindly go to the South African Retail Savings Bond website and check out the frequently asked questions and other things that I didn't cover in this video, like the calculator, the form you need to fill out, and the interest rates for all 3 different products. But that's all from me, and if you're an investor and you want to know more about stocks paying dividends in June 2023, then I kindly suggest you to watch this video right here, where I talk about the stocks paying dividends in the month of June 2023. So that's all from me, guys, and if you love this video, please be sure to subscribe, like, and share these videos to people who want to know more about South African retail savings bond. And that's me, Chaba Malakwani. Don't forget to subscribe, guys, because I've mentioned before that 95% of the people who are watching my content are not subscribed to the video. So if you're watching this video right now and you're not clicking that subscribe button, then I'll kindly wait for you now. Okay guys, that's all from me, and I'll see you in the next video.